I think, how long does this keep going? From a flows perspective, institutions do not buy in a day. They buy in a year, and sometimes over the course of multiple quarters, even or months, to get into their size. So let's say someone's coming in with a nine-figure allocation. They're probably looking at the volume and saying, "Great, we're going to get into this $150 million position over the course of the next 4 months."
Nothing said on One Shot is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Michael, Vance, and our guests may hold positions in the companies, funds, or projects discussed.
What's up?
We're back.
We are in the same office today, which is nice. I think because it looks like there is some sort of resolution on the horizon, hopefully, with the Iran war. Um, Looks like the Strait of Hormuz is in process of opening, which is good. Um,
Well, we should kick things off and kind of level set the conversation here. I think a lot of stuff has been going on. There's been some crypto movements, definitely still some macro stuff on the side. I think subjects that we want to cover are macro. Want to talk to a little bit of the crypto stuff, some of the clarity movements. But I think there's also just like a ton of other things that are going on broadly in the tech ecosystem. Robotics or other things that are just happening simultaneously. But then I think the other big thing that we should talk through is hype. Feels like that's probably the biggest asset. I don't know, any other interesting stuff on your mind lately?
no, I mean, hype is a good place to start. I think the first time that we bought hype was during the tariff tantrum, which was really scary. That was what, last year?
It was like April, May of last year. It was yeah, we've talked about this before, but the best times to be buying are when you are afraid after you hit that button. Um, or it feels a little weird and you're like, wow, I hope this works out. Um, but in the worst case, if you're chasing it downwards, you just keep buying and you lower your average cost basis. So
And we did do that first time. I think we bought it on the way up as well, as kind of the fundamentals started to really prove out. But I think what's different now and kind of what's causing this current rally of Hyperliquid is the stablecoin deal they did with USDC, the pre-IPO markets, HIP4, which is prediction markets, and then cross margining, which will be kind of like I would say, reflation trade in terms of the ability for people to trade size using their instruments as margin. Um, and those things combined with the Hyperliquid ETFs that went live this week have caused it to flip Solana, which is always interesting when you see people start to swap places.
specifically in terms of FDV.
Yeah, in terms of FDV and in terms of Hyperliquid's FDV as well. Um, but I think when we historically, when Solana was kind of taking shots at ETH and gaining steam, it seemed like ETH was the funding currency for Solana longs.
Yep.
And now it feels like that is working in reverse, where Solana has tried and failed to ship a derivatives exchange. And now it's kind of like this horse race between Solana and Hyperliquid, with Solana being the funding leg for the Hyperliquid long. So it's come full circle in many ways.
Yeah, no, uh, we just to like give a little inside track as to how we think about things. We hold hype. We're excited about it. I think it's been something that when we met with Jeff in Singapore, and we're kind of excited about it back then. Obviously, he didn't raise any money, so it was kind of a different conversation. And I've been tracking the platform for a while. When the asset launched, it was just kind of like, hey, this is huge. This feels like a moment. And was very exciting. I think in terms of entrance into it, we were trying to pick our points strategically, and I feel very happy with where we are, where we did, especially now. But what tends to happen over the course of crypto cycles is there's this like what we call an attention asset. And every 2 to 3 years, maybe sometimes even longer, there's this attention asset that just like sucks up all the oxygen in the room and gets all the attention. Um, and it's not something that lasts in like a days to weeks or even kind of months perspective. It's usually something that lasts for like a year or two. And obviously Bitcoin was the first attention asset. It's kind of had its attention flows in and out where you got it kind of like it's got a new narrative and then it kind of like follows the narrative, and like maybe this last time it was a quantum anti-narrative that drove attention away from it, or drove negative attention, so therefore people were selling. 4 year cycle on Bitcoin is something that is consistently and regularly, at least at this point, has been an attention cycle for Bitcoin. But then you had ETH. 2017, it was the attention asset because of ICOs. 2021, it was the attention asset because of NFTs. And then also you had Solana have like an attention cycle. These things kind of ebb and flow over time, but it's very clear, at least what has happened is that the immaculate conception of Hyperliquid, no VCs, the airdrop, the trading activity, the $1 billion of revenue, annualized revenue, like all of the narratives kind of take and hit kind of like perfection in a lot of ways, I would say. They've also been able to do things that I think are hitting at a time when you have the institutional adoption cycles enable things like pre-IPO shares or the trading of oil when the trade of Hormuz gets cut and people are trading it on Sunday afternoons when nobody else is open for trade. Like those types of things build this narrative, which gets Jeff on the Colossus cover and a massive, bio about him. And I think that starts to build the narrative, that starts to build the hype. And then you follow it with these ETFs and the hyperdat. It does feel like it has become the attention asset. It also feels like it's not really stopping. I think we're at the start of flows. We're not at the end, given the institutional adoption cycle. Anecdotally, some things that we have heard is that foundations or institutions or family offices that don't have any asset specific ownership, they may have allocation into crypto funds or fund of funds, that don't have any Bitcoin, don't have any ETH, are buying these and allocating over the next couple of months, large size into hype. That feels like it has kind of broken through as like a differentiated asset. And because there are easy access points, aka the DAT, as well as the ETFs now, it feels like you're going to be able to get like the institutional crowd. Whereas you've never had that. You've never had an institutional potential with an attention asset in crypto yet. So I'm very curious to see kind of like what a post ETF attention asset with all the narrative and the backdrop, as well as this like unique narrative, this unique asset capability, which is like pre-IPO shares or trading of oil 24/7, or more institutionalized prediction markets with HIP4. Like there's so many different angles to hype. I think is really positive, but you've never had the flows as well as the institutional asset capabilities. So a lot of stuff there, but that's generally kind of the things that we've been talking about internally on hype the asset.
Yeah, and when you check the chain, there's a couple of interesting things. MLM on chain is such a great resource for Hyperliquid stats. There was a wallet that bought 2 million hype over the past 34 days. It wasn't a DAT, it wasn't A16Z. These are just people coming out of the woodwork. And I think, the other way to think about the attention asset is like the asset that formerly had the attention. Like you're going to have this prisoner's dilemma where people start to defect. And, it's public now that Multicoin bought a shitload of hype, and good for them. Probably not the best cost basis, but they did what they needed to do. And so everyone in Solana land, I'm sure, is thinking around, why are we staying here? Like, what is the kind of benefit? And the same calculus was going through our heads holding ETH when Solana was gaining on it. So there's a ton of flows from just kind of people coming out of the woodwork. There was also 25 million of net inflows into the larger of the two hype ETFs yesterday, and like this price action really encourages people to deposit more and buy more of these ETFs. And you also have the DATs firing, and you can tell with Hyper being down the past, I think, actually probably just today, like they're really hitting the ATM. So, really small amount of hype is available, really large amount of buying flow is passing to the system. When does this stop? I mean, the attention asset now is probably around the SpaceX pre-IPO markets. The Cerebrus pre-IPO market was there was a good screenshot about just like the early trading on the at NYSE and Nasdaq using Hype as a reference price. And so like there's going to be continuing attention around this asset. And I think, really when it stops is when you see additional supply come off the sidelines, and there's people like Loracle starting to short over 100 million Hype to hedge their entire position.
He's
Um,
down. He's down over 100 million.
well, he has, I think, 100 million of spot to hedge against, so I'm sure he's doing fine. But there's a couple of large venture funds that have bought a shitload, and I'm sure they're going to be selling at some point. But just the quantum of these flows is probably going to overwhelm whatever they have. And what we want to see from Hype is probably this attention asset continue to succeed, and then they need to really kind of figure out just user acquisition. There's less than probably a million people who've ever traded on the platform, probably far less, assuming a lot of those are bots. So like a lot of crypto suffers from what I call small market syndrome. It's related to small man syndrome, but it really is kind of just like how many people are going to use your thing and what fraction of those have you penetrated to date. It's very, very new. And so it's awesome to see something in crypto succeed. And this will be hopefully a template for a lot of other assets to come.
Yeah, just to follow on there, I think Hype has the reflexivity potential, whereas many other assets have had that historically. Like ETH, as ETH goes up, you start to see more ETH wanting to be burned. Like so, it has that reflexive potential. Solana didn't really have that because it doesn't have the same burn mechanism. But I do think that Hype, thought of as a collateral asset, not as like network equity, is a very different proposition where the vast majority of the traders in any sort of ecosystem, especially purse markets, are a power law distribution, maybe even on steroids. And so if you have more collateral, it's kind of like giving more capital to the biggest traders on the platform, which drives direct revenue. Now, can you expand into the million plus customers that are using, prediction markets, HIP4, trading oil, or these pre-IPO shares or tokens, the TBD? But I actually think the other catalysts for attention are post SpaceX IPO, where people will find that to be interesting. We're probably like 3 weeks away from the SpaceX IPO. We're probably like 7 to 10 to 12 months away from uh yeah, 10 to 12, give or take, maybe 7 months away from the SpaceX IPO. Or sorry, the OpenAI IPO, and then maybe sometime early next year is Anthropic. So you've still got like major catalysts for this new like attention economy, I think, coming online, which will bring users in, and I'm sure that there will be wallets, as there already are, to be able to trade this stuff without having to like go on chain and like you make it difficult for people to onboard. I think, how long does this keep going? From a flows perspective, institutions do not buy in a day. They buy in a year, and sometimes over the course of multiple quarters, even, or months, to get into their size. So let's say someone's coming in with a 9-figure allocation. They're probably looking at the volume and saying, "Great, we're going to get into this $150 million position over the course of the next 4 months." So I would assume that it's structural buy flows relative to the new supply coming off the sidelines for the next 4 months. And so I would also think that there aren't going to be changes to the team or the additional community allocation or changes or distributions out of that in the meantime. So just from a flows perspective, I'm fundamentally constructive on where this goes over the next few months.
And I think, by the way, I think OpenAI they just filed to go public as soon as September. So that could happen sooner rather than later. We'll see.
Yeah, that's the confidential filing, which is what SpaceX did last year. It's like when you have less than $1 billion, you can do like the confident $1 billion of profit. You can do the confidential filing, which gives you 12 months. Uh,
So yeah, midpoint of that is probably 6 months, but there does feel like there is now some sort of rush to go public, and the SpaceX IPO documents are pretty interesting. I skimmed them. I think the highlights for me are number one. It kind of made me more bullish on like neoclouds, given that like he's selling all this compute to Anthropic.
I'd say
XAI is selling it to Anthropic. They're selling it at 1.5 or 1.25 billion a month. That represents the vast majority of at least like go forward next year revenue. he obviously has the Starlink division, he has rocket launches, he has X8, is X the, formerly Twitter, but like, man, selling compute is just such a profitable business right now. And it's not surprising that he's gotten into it, given that, he hasn't been able to really use it on his own effectively, but like, it kind of really tees up these neoclouds for what I think is going to be a nice run into the OpenAI IPO or Anthropic IPO, just because people are going to be like, man, most of the value in this thing is the neocloud, and not like core value, but like at least revenue over the near term. And last thing I would say about SpaceX is like, this has been a 20-year, or not 20-year, like 10-year journey. It's so impressive. Like, he's caught rockets with chopsticks, coming back down to Earth. Um, and then you look at Anthropic, and they've got 40 billion of ARR just like basically created out of thin air this year. They make it look really easy to generate that much revenue, and I wonder how sticky that is.
Yeah, well, so I think profitable is probably not the right way of describing it. I think high growth is the right way to describe the neoclouds, because they spent $22 billion on capex last year for XAI. Granted, they're making 15 billion back this year, so like the payback is really good. But it is a capital intensive business, and I think what you can kind of assume is there's sort of two businesses that seem to be catching the attention, three business models that are really catching the attention of everyone right now. There's obviously space. That is just like the largest TAM possible. If you look at his TAM slide, it's literally like tens of trillions of dollars of potential business value. Starlink is also probably the future of the business, of at least the medium term future of the business of SpaceX, where maybe XAI selling compute is like how you basically get to the IPO. Starlink is how you can get to hundreds of billions of revenue, maybe even trillion of revenue over the fullness of time, by basically replacing every single telecom, and having it be like much more profitable per unit that you're sending up, which is kind of the equation now. And when you're the transport layer for the network layer that you're building, it is a very aligned perspective. But yeah, I think so space is the other vector here that's just like the largest TAM. Selling compute, I think, is and the second business that's obviously working is Anthropic and OpenAI. Being a being a worldly recognized model is a license to print money, it seems, or at least a license to generate revenue, which hopefully prints money, if you if you can get the capex cycle right. But I think neoclouds are what we probably see, and I think that there were really good perspectives by Gavin Baker shared on this on a couple of different podcasts and interviews that he's done recently. But it is the classic Hamilton Heller, I think that's his name. The seven powers guy. It's the classic cornered resource equation, where you have supply far lacking demand, and it's not going to be something that gets fixed basically until you have physical things going into the ground, which may be building buildings, making GPUs, plugging them in. So you need utilities, power, you need approvals from the local governments, and you need to build the data centers, and that just takes time. But the other element that he talked about on these pods was that you have basically the country of Taiwan as a rate limiter on us getting into like overblown bubble territory, where the wafer production capabilities are just slow enough so that we won't sell $1 trillion of GPUs in 2026 or 2027, even though we probably have demand for it. And so I think that this continues on for a really, really long time. XAI is just a representation of that. Neoclouds are another representation of this. You have a cornered resource that for the next 5 years is just fundamentally going to continue to grow. Every single megawatt of power will be powered with AI compute. Every single GPU will be plugged in, and every single plugged in GPU will be 100% utilized. Period. Full stop. The other thing that I think is really funny from a narrative perspective is like SpaceX is going to do these like distributed clusters around orbital compute. And people have said for the last couple of months, like data centers in space is the future of SpaceX, which means like you've got a building floating around and like that you assume like there's all these racks put together. Like, no, like, let's be serious. These are like 10 by 4 by 5 rack clusters that are attached to a satellite looking object that is floating around, and they're connected by lasers in the same way that Starlink satellites are connected in forming the network for Starlink. Getting them up there, I think, is not the problem. Building them to have always on solar power is not the problem. Cooling probably is also not the problem. The big problem that he kind of just like Davin Baker kind of just like waxed poetic and like glossed over. He is just like, oh, well, how do you go out and fix these things? These are like $25 million racks with GB300s, maybe $30 or $40 million racks with the freshest.
Robots.
Oh, Optimus. We'll just put robots out there and they'll be floating around, flying in between these things, and just like they'll fix the problems for it. It's like, I mean, and we've also gone deep on robotics and super bullish on the category, super excited about everything that's going on there. But the reality is that there's like the production capabilities like hundreds to thousands per year right now. Period, like full stop across the entire world. And the capabilities of putting them in a terrestrial setting and being able to have them work on land on Earth is one thing. Having them work on space, data center racks that are floating around low Earth orbit, it's going to be a while. So I don't discount the potential for it happening. I discount the timeline of 5 years. It's probably closer to 10.
It's probably closer to 10. The other one I saw that was funded directly by Peter Thiel and not Founders Fund was the sea-based data center, where you're using the motion of the ocean to spin a turbine to create energy for a data center. What's clear is that nobody wants these things in their neighborhood. They're super loud. We also did go tour a company that is and there's a couple companies doing this that are putting data centers next to their house. And to their credit, like they made the thing like very, very quiet. It is kind of funny to think about, like, if you strap a Blackwell cluster to your home, are you now a target for like home invasions, for robberies? Like, people are stealing copper out of streetlights. They're definitely going to go take a shot at you if you have Blackwells
It's like
strapped to
a $10 million car in your driveway. It's
It's
just
a
like, oh,
$10 car on your $300,000 house, and you're left to the absolute tits to get it done. We'll see. I mean, like, one of the things we've been really focusing on recently is like this distributed energy kind of thesis, and there's certain energy types, and they're not always what you would think, and there's a lot more energy types than are probably commonly thought through that could fit this mandate. One of them is geothermal. One of them is stranded energy assets. One of them is residences strung together using their batteries and power resources to power GPUs. Confident that someone is going to figure this out, because I think the other thing that's happening is this distributed compute thesis that we've talked about, where the compute itself is getting more dispersed. So there's going to be something there. I just think it's a little bit goofy to assume that oh yeah, it's just going to be as easy as strapping a GPU to your home. I'm not quite sure it's that easy.
or is he putting an Optimus out in space to solve your mechanical issues?
Yeah, and just like last thing on SpaceX is, in this filing, there's mass drivers on the moon. There's, the TAM of all of humanity. There's like, literally, it seems like this thing was like pre-written for LLMs to just like consume and spit out the most bullish, possible prognosis on the business. And the float is really interesting too, where I think it's like 20% gets unlocked immediately. And then it's like, if it trades above 30% of the IPO price, you get another unlock. And then if it trades 50%, you get another unlock. And so there's some really interesting like pumponomics built into this thing. I personally think it's going to do really well, and then it'll probably do not so well. Just because it'll do really well because there's all these triggers. You'll have all these passive flows from the indices, which it is included in from day one, flowing in, and then you're going to have the unlocks, which is just like such a serious force of gravity that Figma at one point was worth, I think, almost $100 billion, and now it's down 90%. And people make fun of them, but like, there's gonna be
Down 90%.
what is?
Easy to pick on when they're down 90%.
I know, and I am genuinely rooting for Figma, but it's just there's supply to be sold, and I think the Figma unlocks are actually in August of this year for the venture investors, so it'll be telling to see kind of what their modus operandi is, and then you'll have OpenAI and you'll have Anthropic, and that's kind of the rest of the calendar, and I think a lot of that will be Hyperliquid centric as they start to get priced.
I would have assumed, unless otherwise, I could be wrong, but I would assume that the venture investors were unlocked, because I do know that
They,
Elon Musk.
they did a voluntary lock.
Oh, okay. Yeah. Well, I was going to say, as part of this perspective, one of the things that is interesting is that Elon Musk and the major investors in the company, so Valor and
Yeah, they're not eligible for this treatment.
they're not eligible for this treatment, and their minimum is 366 days. So it's basically saying like the vast majority of the float, which is Elon plus Valor plus other investors, is going to be locked for at least a year. Smaller investors may be able to sell. I don't. I actually think that this continues to trade up. I don't think it sells off too hard after the 6 months because of all the things we just discussed. Um, and I think the other thing too is, in classic IPO preparations, you have to find the right time broadly, but what you also need to do is put the business in a position so that for whatever period of time you have as the unlocks, and historically this has been like you want to have your first three quarterly earnings be something that you prove to the market that you're reliable and that you can grow and basically offset the dynamics of the unlocks at the same time as they're unlocking. And I think that that's honestly like the major flaw here in what happened with Figma. It ran too hot. You can't control that. And then it dropped, which led to it dropping further. And then by the time it was dropping further, you had a lack of business, kind of fundamentals driving or propping up the business at that point. And then you had basically the entire SaaS apocalypse happen at the time of the same, unlocks, coming due. It's just like terrible timing. But SpaceX has been around for 25 years. My guess is that they are waiting and have been waiting to have this business in a position where they will be scaling and growing consistently over the next year, whether that's XAI, whether that's growth from the Starlink business, or maybe they really like change something in terms of orbital databases, Optimus, whatever it may be. I don't know, but I would imagine they have a couple of things in mind which will offset the major unlocks over this period of time. I bet they've spent the time to think about it and plan for it.
Do you think they end up buying Cursor?
Yes, they said they will. The only reason why they wouldn't, they said, is if it gets shot down from a competitive or antitrust perspective, but then it's a $10 billion breakup fee.
Yeah,
So
I think Elon knows the guys, so
yeah,
not super worried about the regulatory side. What else is there to talk about? There was Google I/O this week. I guess the main thing from that conference that I took away is like they are going to try to press down the pricing of these tokens in some sort of attempt to either steal market share or compress the revenue of their competitors. Um, it will be really interesting to see, and the information came out with like Anthropic's at I think 40 billion of run rate and OpenAI is at like 35 or something. Like I think this summer, my guess is that you stop seeing that exponential growth, and it's like probably like super linear, which is still super impressive at that scale. But like, it's not like it's going to be the largest. It's not like it's going to be 100% of U.S. GDP in a year. But it'll be interesting to see how the market reacts as these things start to slow. The upside is that at least Anthropic is now profitable. So there's a lot going on.
Okay, then let me ask this question: where do you peg their ARR for both companies by the end of the year?
I would probably take the under on like 150 billion. Just because I think there's now Devon, there's which is the cognition coding model. I think Cursor could really be good, and apparently like they're doing some sort of promotional giveaway for Cursor users to get them back on platform. OpenAI is also kind of doing these guaranteed compute deals and also subsidies. So I think like there's going to be a lot more competition than there has been in the past. And also, I think like people are just going to start routing tokens better to things that really need that high quality model versus things that can kind of use something more open source and cheaper. Like there's going to be some sort of compression here, which maybe not this year, but maybe next year is kind of going to be the dominant theme of the market and could compress some of the exponential growth. But what do you think?
Over 150 for both.
Over 150 for both?
Yeah,
Oh, I'm under 150 for.
maybe even closer to 200 for Anthropic. Um, look, uh, I think Benioff even said this week. He's like, I'm going to spend more than $300 million this year on Anthropic alone.
Yep.
And like that major customer, obviously, but like they're not spending that much on any other third party provider for any services. Period. Like that is just like an absurd amount of spend for a digital service. And granted, I think you can't think of it as just like a digital provider. It is or a software solution. It is like replacing engineering headcount, or multiplying what they currently have for engineering headcount. So like from a productivity perspective, and I think we actually do start to see productivity numbers for how these are taking effect in at least publicly traded companies, in the 2026 timeframe. Maybe like people start reporting on it in earnings calls. It's not something that's been widely like metriced yet, but I think that happens at some point this year, and then is something that people track. So yeah, I broadly think like these things are just going to keep on getting bigger. Yeah, cognition and cursor are going to be reasons why you wouldn't spend, but the capabilities of the core models of Mythos, or whatever OpenAI is going to launch for the rest of the year, I think will supersede. Talking about the frontier token pricing, like that is the new business model for OpenAI and Anthropic, where they're not selling subscriptions anymore. And like that is kind of how they have been and given access to people. But the business model of having the front facing like initial business be $200 a month. Oh, now you really like it. Great. Here, we're going to sell you an a la carte version of this. And then, oh, you really, really like it to where you're replacing your engineering team. Great. We're going to send you the enterprise version with the frontier tokens that are the best, but you're also going to pay 3x per token. Like that world of shift just means that like you've never seen a SaaS business with 500% net dollar retention. Like that is just not something you see new customers coming in for SaaS products that are really excited, but you don't see them increasing their spend 5x within a year. So I think that there's something special going on from the business model perspective, and extrapolating, the growth rates, you get to that 150 plus. Can they sustain it? I think so. I don't think they've tapped, like you've got the Mark Benioffs who are in San Francisco, recognizing the innovator's dilemma perspective of his SaaS business down 60%. He has to start buying $300 million of Anthropic. Think about every other company that isn't in San Francisco that has a tech business, and a software, multiple, that is also going to start to realize this, and also going to start to spend tens to hundreds of millions of dollars per year. Like you still have this whole ocean of universe, of enterprise universe that you haven't touched yet.
It's kind of bullish. I mean, we've been discussing with our friends who work in software, like whether the bottom is in for software broadly. Salesforce is, I think, 3-4x sales. It's got a $50 billion buyback, which is second only to the recently announced NVIDIA $80 billion buyback. And so there's going to be real buying pressure on a lot of these things. I don't think everyone has the balance sheet of Salesforce, but very, very much could see in a year's time software being up a lot from here. And I think kind of the early indication of what that could look like is CrowdStrike. And a lot of the bigger cybersecurity names, they were down, the stock peaked, I think, or probably 6 or 9 months ago at like 700. It got down to 350. It's back to 680. There's just kind of like this, if you don't know whether you'll be impacted by AI, sell it. And once you prove that you won't be, or could be a tailwind, like it re-rates almost immediately. And I think that is the Benioff perspective. And keep in mind that he's a world-class marketer slash potentially a little bit of storytelling on top of there. But like these software stocks are probably closer to the bottom than about to accelerate again. And I think the most recent one to actually kind of catch this is Intuit.
Yep.
And last night they were down 15% overnight, and then today they went down, I think, about 22%. And it's pretty well summed up by a tweet that I saw today, which is like, I don't need to use TurboTax. I just put all my shit into Claude. It's like results may vary on that, and I don't know how the IRS will feel if you tell them that your AI agent like ate your homework slash fucked up your taxes. So
My cost basis is wrong because of that hallucination that I had from 3 years ago.
and unless you're Donald Trump and you have a lifetime of no audits guaranteed, which is honestly that is incredible work if you can get it. That could be a big problem. But like Intuit has now lost, I think, 60% of its market cap.
And insane that I think 3 days ago or 2 days, it was earlier this week that they announced a 17% layoff. Like you rarely see a 17% layoff and then stock continues to crater. Usually it's like, okay, great, cutting costs, getting back to reasonable valuation, like all of that is good. Um, I do think that there will be some continued losers in terms of SaaS businesses that are just like subject to, or at least hypothetically subject to, AI tools taking over their eating their lunch. But I agree. I think the distribution that you have with a lot of these enterprise customers, so like Salesforce and Workday, and like they're in the Fortune 100, and those are their main customers. It's going to be hard to rip and replace. Also think, Intuit is a very much small business oriented company. It's tough. It's just like, you're already buying this $200 a month Claude um, service, and it's doing everything for you, including building your homepage. Can it also do your taxes? Is kind of like a question, but it's also something that could become more and more real over time. What are the associated things that you would strip out of that, spending cycle, potentially into it? So I think that there's some questions around small businesses and what they buy. But it is pretty insane to see, the sell off that it has been going through, as one of the biggest tech companies and historically one of the most well known tech companies in the space. I think the other thing we should talk through is clarity, and we should also talk through macro, as we kind of skipped over that from the beginning.
The macro is seems like it's getting better. The 10-year topped at 4.7. And if you remember from the Trump tariff tantrum, that is where Trump said that the market was getting the yips, and that he was going to have to basically capitulate. It ultimately, even though, I mean, most boomers really do look at the bond market more than the stock market, and even more so than that, like the Dow Jones versus the Nasdaq, and they're getting to the point of max pain. And I think he's been told by Scott Bessent that, like, if there's any more pain in the bond market, that risks fiscal instability, and that is a bigger threat than the Strait of Hormuz. So I would say you kind of have to be positioned for a resolution versus things getting materially worse, because materially worse is like a lot worse for not just America, but probably the world. And you see that in the JGB market and the yen. So there's just like a lot on the line, and I think Donnie is kind of getting the message at this point.
I hope so. I mean, as we get closer and closer to those midterms, his approval ratings just get further and further below where they previously were. It's brutal out there. If it turns in this direction, I think it'll be a very different second part of the second term. And to kind of touch on it maybe directly, I think that this is where clarity, and we're structurally positive that clarity will happen. It's just a question of when and potentially what will go into it. Now, I think we have pretty good understanding of the major points, where whether it be stablecoin yield, the potential for it, or potentially the ethics element. And I know ethics has kind of been overblown as this, like, oh, Donald Trump will never pass this or never do this. Well, I think what ethics invariably means is, right now, if you are a politically exposed person, a PEP, you're not allowed to sit on the board of a publicly traded company or have ownership where you can dictate terms or control assets within a publicly traded entity. It's why, I don't know if anybody has signed these things or verified these things in brokerage accounts where it's like, I am not, or any of my family members are not PEPs. That's what it comes from. And that limitation is so that basically you can't influence with your political position the potential for a publicly traded asset in the markets. And so I think, having crypto just be added to that list, like, you can't be a publicly traded board of director, you can't launch your own crypto asset if you're or if your family is a politically exposed person, is like a very reasonable situation that I would imagine gets passed. It is probably what this like ethics element is. People have been talking about this on other pods that I've listened to, but it's not something that hasn't been done because people are afraid of it. It's just, it hasn't been done because the process has been Senate banking first, then you combine with agriculture, and then you do the ethics committee process. And so you just haven't been able to work through that yet. I would also imagine they're not going to put forward a draft to the Senate floor that they don't think would be passed by the White House. And so I would imagine we will have a lot more information on clarity coming through pretty soon, in terms of what the timing is. And right now it's about getting time on the Senate floor, which it probably won't be in June, before the 4th of July recess. It looks like it'll be in July before the August recess. So it's coming down to the wire in some ways. Could also happen in a lame duck season, which would be post-election. But I think depending on how the election goes, like you kind of leave it up to chance based off of the results there.
And Trump has the no audit.
Right. That's the new thing this week. He's got the get out of jail free card permanently for him and his family.
How are you going to charge him with crimes even if you can find them?
Well, the point is you just wouldn't be able to launch. And so they're basically saying you wouldn't be able to be the creator of a crypto asset if you are a politically exposed person. Doesn't have anything to do with taxes. Now, maybe taxes is one way that he just feels like, okay, we're covered. We did what we wanted to. Now it's over. And he's willing to agree to a PEP restriction. I would hope that that's the case. But generally, yeah, it's pretty insane to have a permanent get out free card with the IRS.
It's nice work. All right, I gotta hop. But thank you everyone, and we'll be back.
All right. See you soon.
Later.